Hey guys, it's Carter. Welcome back to the channel. I hope you guys are all having an amazing day today. Now in today's video, we are going to be breaking down swing trading. We're going to be talking about how I make a little over $500 per day from swing trading stocks and my strategies, my mindset. So guys, I hope you guys all enjoy it. If you guys do, hit that like button and subscribe. And if you guys are like, who is this random guy on YouTube? My name is Carter. I'm actually a full-time trader in the stock market and I've been for over 6 years. And with that being said, we do have an amazing school where we teach you how to find these stocks, how to implement strategies, build your own strategy. It's a one-stop shop for all of your swing trading needs. So I highly recommend it. I'll put it down below. You guys can use code YouTube, 20% off. Check it out, all caps, YouTube. Check it out. I'll see you in there. But guys, let's just jump into this. So a lot of people think that swing trading is easy or it's an easy way to get rich quick. And I just want to be completely upfront that it's not. Swing trading is a job. It's a career and you have to treat it like one. If you treat it like a hobby, you're going to get hobby results. And you have to be dedicated. You have to put in that time to learn. And I can't stress it enough. But all right, let's jump into it here. So, all right. Looking at this chart, this is the broker I use. It's Moomoo. They're absolutely fantastic. They offer great charting, scanning, and even paper trading. So if you want to practice your trades, you can do it all with Moomoo. I'll put them down below. Check them out. You guys can get like 15 free stocks for signing up. Check them out. But all right. What do I look for a swing trade? So the first thing I always like is the stock on an upward trend. In my opinion, I find stocks that are on an upward trend, just for me, they give me more reassurance and we just see a little more tendencies of getting a lot more buying pressure involved. We see that buying pressure's in it. So looking at it here, what do we look for? So stocks on an upward trend that have sold off down to some level of support. Now, support could be a variety of things. It could be indicators. It could be price support. It could be multiple of things. And looking at it here, what do we notice, right? We notice that it's seen tendencies of it using this 200-day moving average line in the past, okay? You guys can see it hits it several times, right? Establishing some pretty hard support and just has a hard time breaking above it. Now, this blue line here is the 90-day moving average line. The difference between the 200 and the 90 is the 200 is going to act as a stronger support than the 90. But either way, you guys can see that it comes in contact, classifying the 90 as support as well. And we did make a great trade on this earlier this past week or last month, where the stock went from about $15 to $24. Now, recently, the stock has sold off down to the 200-day moving average line, which we understand that there is a lot of support there. So we took a nice trade near and around $13. And as the stock is squeezing up over $16, it sold off a little bit, but it was an astonishing move. You guys can see looking, at like the hourly chart, we had this great reversal where the stock pretty much was going below the moving average lines, then it started breaking out above them, sold off, and now we're creeping our way back up. So this was an absolute fantastic trade, and the thing is how often does this happen? I already know a lot of people are saying, how often does moving average lines act as support? Well, the thing is, when the stocks are below it, we see tendencies of them using it as resistance. So you guys can see the stock below it, and it just has a hard time breaking above it. So establishing resistance. So there's a variety of things that moving average lines act as, but this is just a clear example. Let's show you guys one more here. This is a more recent swing trade, ticker symbol BLND. The reason I love this is we've seen tendencies of it using this 90 days, so that blue line as support. You guys can see it hits it several times, establishing very hard support. Recently, it sold off down to these levels near around $2 and about 17 cents. The stock went from 217 recently climbing up to 250. What an astonishing move. Today it was up 4%. Yesterday was another 4%. In the matter of a couple of days, it was up about 8% in value just by using basic moving average lines. You guys can see 217 climbing up to about 240. Now, either way, this thing could see another move up to resistance at about $3.37, which would be a very good risk and reward. So every time I make a trade, I always will draw out my risk and reward and my target. So like something like this, I'll put my target at old resistance right here, and I'll set my stop loss just below it. So you guys can see I'm pretty much risking about $1 to make about $3 a share, which is a decent risk and reward. But overall, this is a very basic strategy a lot of beginners or intermediate or even expert traders can do and start implementing in their strategy. Let's just do one more just for fun here. This is Palo Alto. This one here, we've seen these tendencies of it using the 200, the 90 moving average lines as support. Recently sold off down to these levels near and around this 268 mark. Recently starting to climb its way up. Risked about $1 to make over $2.79. Absolute fantastic trade. And the thing is we could see this close. We do see tendencies of stocks trying to fill their recent gap. So you guys can see it gap down. Now we could see a tendency of it filling that gap. So very, very basic strategy, guys. I hope you guys all enjoyed it. If you guys have any questions, by all means, ask. But we'll see you guys later. Hit that like button, subscribe, and we'll see you guys tomorrow. Don't forget to check out my swing trading masterclass course. It's absolutely fantastic, and you guys can use code YouTube to get 20% off. But I'll see you in there. Let's dive. I'll see you in the course, and we'll see you guys later.